Welcome back to Bold TV. I'm your host, Philip Michael. And of course, we're going to talk about some current stuff right here. Now, we all know that Bitcoin is going crazy these days, but it isn't the only player in the digital money space. Here to tell us about all of the blockchain and fintech moves that we should look out for is Kenneth Goodwin. Kenneth has over 20 years of banking and capital markets experience. He's also the managing partner of Jeanensis, LLC. Ken, did I say that right?
You did. You hit it right on the nail, man.
Fantastic.
I appreciate that.
Welcome to the show.
Hey, it's an honor and a privilege. Always an honor and a privilege. I appreciate it.
You got it. Now, let's jump right into it. Can you start by breaking down blockchain and how it relates to Bitcoin and other digital currencies? And before you answer, pretend that I'm an idiot and that I am in the 5th grade and I now must understand what you're about to say.
Okay. Well, I taught this at Peru College many years ago, and I started off at the 3 Ps. The 3 Ps for blockchain is people, process, and product.
Okay.
So when Satoshi Nakamoto created the white paper for it, essentially what he did was his goal was what's the fastest way we can get money from A to Z. So you're Z and I'm A.
Mm-hmm.
But in between A to Z, you got B, C, D, E, F, all that other stuff. And that's representation of like government and operations. So the whole goal is to get that money to move from A to Z with ease. So think of it that way. So the people are the members of the community. The product is the Bitcoin itself. The process is what we call decentralization. A lot of people think process, or they think decentralization is people. It's not really people. It is the process. And the process of decentralization is to make it more flexible, more easier to move from A to Z. And that's probably the simplest way of thinking it. Now, I always say this is that you separate cryptocurrencies from blockchain technology. The technology is what drives that cryptocurrency, and that cryptocurrency tends to be Bitcoin for now. We're going to say Bitcoin. But blockchain technology is what they call that distributed ledger. So you and I, because we're A to Z, we're basically saying, hey, we agree to having certain standards. And because we agree to having certain standards, we're going to be able to do a peer-to-peer lending. And then later on, Ethereum came out and said, hey, you know what? Let's make this a little smarter here. It's very simple, but what we're going to do, we're going to add some smart contracts. And then those smart contracts, we're going to add instructions. And those instructions, instead of just going from A to Z, now we can do from maybe A to K and K to Z. And now we can do lending, we can do trading, all these other things we can do with these smart contracts. That's probably the best way of looking at it.
You mentioned A to Z, and me being Z, you being A, money coming from you to over here. Typically, that process, which you've said has become decentralized, is the banks own that. You have to do it a certain way. You have to put in a wire request. They then send it over for it to get to me. It's a laborious, strenuous process. That's quite inefficient. So what you're saying, A to Z, is it instantaneous?
It's instantaneous. It's very easy, and it doesn't require, to a certain degree, to have a bank involved.
I follow that logic. A to Z, instantaneous, boom. I see something similar with Cash App, Venmo. I get that. When you say A to K, now I am confused. What does that mean?
Well, A to K is, let's say you and I decide to do another product. So we want, instead of just you and I doing A to Z, we want to say lend. We want to lend to each other. So you want to lend on my platform. And so what happens here is that instead of, again, we're going to use the bank as an example.
Mm-hmm.
Instead of running to the bank and saying, I want to run to the bank and I need a loan and I need to do a lending. So mainly banks are savings and loans. So essentially, when at the bank, it requires you to have documentation. It requires you to have all this other information. And now, in this case, it's going to make the process a lot more easier because you and I are on the same platform, and we are basically lending to each other.
Okay,
so that's what I mean by A to K.
All right, so it's basically the simplest of terms. It means on the very basic level, exchange transfer of money. Here's some money to you. Oh, thank you. Here's some money to me. And then you can, building on that foundation, you can now go, wait a minute, I'd like to lend you some money that you eventually would have to pay me back, maybe with some interest. And then you can add that component to it, the building blocks of that. Is that what you mean by that? That it has that flexibility to make all of those processes within, let's say, a banking or a money system instantaneous and efficient? Is that where you're getting at?
Exactly. And now you hit it beautifully, because that's why I said the word smart contract.
What is that? What does that mean? What does that mean,
Right.
smart contract?
So beautiful, beautiful, beautiful. So in the old banking days, you got to start off. Everything starts off with data. Data is like gold. And so what you hear in the blockchain space is that people say, well, people, the bank, the unbanked. That was never really the key in blockchain. Because you mentioned it before about mobile applications. Many people in third world nations are using mobile applications. So they're able to move money from A to Z. Now, the big key here was the collection and retaining of data. So you and I have to, we have birth certificates, driver's license, and so forth. That has to be stored and maintained. So that information is stored on that platform. So the A to K portion of that is that in banks is savings and loans. So banks receive deposits, and it also lends money. Mm-hmm. And the lending portion hasn't always worked in the favor of people. So what happens is, you have discriminatory practices.
Okay.
Documents are not there, right? So banks are technically they make a choice. I'm going to lend you the money. I'm not going to lend you the money. And we know that's a problem. It's a historical issue.
I get where you're getting at. Effectively, by having the system this way, where it's totally digitized, it actually eradicates the human interaction where discrimination and even unconscious bias could kick in and then create that inequality, whether it's conscious or not. Is that correctly assumed?
That is, it's not, it's you asked, you said assume. You're right.
Okay, good. Just wanted to make sure, because
right.
a lot of times when people, and again, this goes with anything where there's professional conversation, the challenge becomes bridging the gap between the layman and the professional, because there's a slang of sorts that takes place, and that's where that disconnect happens. So I want to make sure, just probably a smart contract to you is probably as basic as a bottle of water. So I want to make sure that smart contract, because smart tech contract, digital, this and that, so that we can merge the understanding and hopefully allow that knowledge to mutate somehow. But now I want to jump into another thing. How do people get access to this digital currency? Because now we understand it's instantaneous, A to Z, A to K. How do we get access to digital currency, and can it be used to build a business or even pay for everyday essentials?
Well, that's a great question. Nowadays you can, actually. Nowadays you can definitely go on PayPal. PayPal offers services for that. CoinMarketCap, which essentially, and I'm throwing out names, and I don't want to throw out companies, but I always say, and I want to disclose this very easily, you do your research first. So before you jump in and make a decision to get digital assets, do your research first. Mm-hmm. Make sure that those digital assets are in line, like with any investment, with your values. And what I mean by that, let's separate the categories here. You have cryptocurrencies, and you have what they call digital token platforms or applications. So these are companies like Ethereum. They actually have an application. Algorand, they have an application. So they sell these to both the consumer and commercial corporations.
What does application mean? You mean an app?
Right, an actual application. So they actually have, basically, they are creating a system, a procedure that allows for this to occur, a transaction to occur on a platform. And they offer that up to corporations.
And platforms such as, what's a platform? What's an example of a platform?
I give you an example. Quorum. I'm going to give you a really good example. Quorum was created by JP Morgan Chase. Right. So we know that Jamie Dimon, we know the CEO of JP Morgan Chase, have gone publicly and said, well, digital currencies are fraud. But I know it's smart, right? But on the background, they created this platform called Quorum. And Quorum was a distributed ledger technology platform. So it's a blockchain application that allows for the banks clients to do payments and settlement between each other. And it was really, really good. So it is an application. It is a coded application that allows for, for counterparties to interact with each other. Now, what I'm saying is that you have companies that have the digital currency, but they also are creating these applications. And you have to, in my case, when I buy these digital currencies, these digital assets, I separate the two. I separate the cryptocurrency, which is the Bitcoin, from Ethereum, which is really application based.
What's the difference between the two? Because they sort of get, I don't want to say conflated, but they get thrown into the same category. Oh, Ripple, Bitcoin, Ethereum.
Right.
What's the difference?
Right. And that's beautiful that you say that. That's beautiful. When you go on CoinMarketCap, it actually, you can separate. It'll show you, it'll categorize it. It'll say cryptocurrency, and it would also say digital application. So, which means it still has a crypto, but let's say you and I, we create a company. We decide that we wanted to do our own cryptocurrency. So
Okay.
we want to create, but we also want, which you can do, right? But we also want to, our background is that we have the ability to write code. And in writing code, we can build our own application that solves a problem. And that problem could be towards payments. That problem could be towards farming. That problem could be towards real estate. But that information is an application. But yet there's a token behind that. So the token is trading, but yet we also have the application too. So that's what you want to distinguish when you decide to invest.
Yeah, there's clearly a lot of moving parts and still a lot that need to be understood. It's fairly nascent, the technology itself, the adoption even more so. What I'd like to ask you now is, what is really truly the upside of crypto and cryptocurrency? And before you ask, I want to throw in this, I want to preface it by saying this. There's a lot of big names that are getting into Bitcoin specifically. It seems to be of course, it's the market leader for cryptocurrency. It seems to be the poster child for the whole movement. What is the upside for cryptocurrency? And is it more so a crypto asset, meaning that it will be a place for people to store their capital to preserve the value, to protect against inflation? Or will it eventually be something that people use to transact on a daily basis? What is the upside and where do you see it going?
No, that's beautiful. That's a beautiful question. Well, as you probably know, Bitcoin, I'm going to use Bitcoin as an example. Bitcoin hashes, the last hash, I believe, is in 2022.
Hash?
So,
what does that mean?
Right. And what that means is that it is a declining supply and increasing demand. So there's going to be less Bitcoins in the market. So meaning that there's not going to be any more Bitcoins that's going to be produced. So Bitcoin there's not going to be any more. So here's a great thing about that is that because it is a declining supply and you have increased demand, the price is going to go up. So right now, I think Bitcoin is about 55K from what I believe. I'll probably hit at 100, right? It's gonna go up. It's gonna go up. Now, the reason why it's going up is twofold. You hit both of them. You have a declining dollar, right? So the price of the dollar has been declining, right? So the dollar is weakening against most currencies. So a weakening dollar shows an inflationary price, and therefore now you have the price of Bitcoin going up, essentially. So people are basically saying, hey, let's find another alternative investment to put our money into that's going to protect us against the inflationary prices. That's one of the things that's going to happen. Now, and you say the store value. So the question is, what's going to happen with Bitcoin? Will it be used for payments? It could be. Or would it be used as a store of value where people just say, hey, I decide to hold on to my Bitcoin.
Like gold.
Like it's collectible, right? Like gold. And say, hey, you know what? There's not too many out there. And because I know there's not too many out there, I'm going to hold on to it knowing that the price is going to go up and I can sell whenever I want to sell. So that's what I think is going to happen. Now, here's the advantage I think will happen. There's alternative tokens. Those alternative coins like the Ethereum, the Algorand. I won't mention Ripple because Ripple's going through some challenges now. Chain links of the world. They're going to benefit because they're runoffs,
of course,
from Bitcoin. So there's going to be some benefit on the prices on those particular tokens.
The way I liken it to when I hear this is, if this is indeed a limited supply, this is what everyone says. If it was something that was created digitally, I don't see why you couldn't just create more. This is something that I don't understand, and it's probably a conversation for another time, but it makes no sense to me. That said, let's say that claim is indeed true. Think of gold or platinum, then some other precious metal will gain value, like silver, bronze, and things of that nature. And I sort of see if Bitcoin indeed will be the gold, no pun intended, standard for digital assets or digital currency, whichever direction it goes in. Obviously, there will be some other emerging ones that will never be as precious as the gold standard, but will have some value nonetheless. And also, I assume, will be in limited supply. Does the same thing apply to these other cryptocurrencies? Is there also a finite amount?
There's a finite amount that they do establish, not like Bitcoin. They tend to be a lot more in terms of they have an open market, they have more out there, at least in the marketplace. Bitcoin, you can hash it. That's the one thing that people have to realize is that and when we say hash, means there's multiple versions of Bitcoin. So the other option is that you can hash these tokens. And when you hash them, it's like the best way to put it is like remember Gizmo, the old Gizmo when you put water and they duplicate? And that's probably the same case in the digital asset space. So there'll be the opportunity to hash these tokens and create duplicates of it. But for now, a lot of these tokens are floating at a very wide cap space because they need that. They need their prices to go up, and they need people to buy into their ecosystem.
Well, it's for sure an interesting space to follow, and there'll be much more to follow in the future. Now, thank you, Kenneth, for breaking this down. I really appreciate you. Thank you so much.
Oh, thank you for having me here. I hope to be back again. I hope I made it simple for everybody.
I hope so. I hope so too. I think so, because if I can understand it, I'm pretty sure people can too, because I'm not exactly the sharpest knife in the drawer. So if I can get it, I'm sure other people can get it too. So thank you for breaking it down for me. And thank you all for watching, and make sure you follow us at Bo TV everywhere. Instagram, TikTok, YouTube, everywhere. Just go follow us. All right? Thank you for tuning in. Peace out. I'm out of here. I'm your host, Philip Michael. And until next time, goodbye.